The capacity to learn is a gift. The ability to learn is a skill. The willingness to learn is a choice. Quoted Brian Herbert. Knowing others is intelligence. Knowing yourself is true wisdom. Mastering others is strength. Mastering yourself is true power. With those words of wisdom, let's kickstart the day with motivation and enthusiasm. Good morning to one and all present here. I take immense pleasure in welcoming you all to today's international webinar titled Accounting Data Analytics. Looking forward to having an astounding session ahead. I now request Dr. K. Maithili, Assistant Professor, Department of Commerce Aided, to welcome and introduce our speaker to the audience.
Good morning to one and all. On behalf of the Postgraduate and Research Department of Commerce, it gives me immense pleasure to welcome you all to the international webinar on accounting data analytics. With legitimate pride and happiness, I wholeheartedly welcome Ms. Vaishnavi Senthil, speaker for today's session. Ms. Vaishnavi, a proud alumna of Ethiraj College and my dear student who completed her graduation student transfer program in Concordia College, New York in 2019 to graduate with an American bachelor's degree. She was the Joint Association Secretary in the Department of Accounting and Finance. She won the first place in the elocution contest held during the Founders' Day celebrations. She's a good orator and debater and has won numerous prizes. Ms. Vaishnavi is a critical thinker and hardworking team player with strong communication skills. She is currently working as the staff accountant MHW Limited, New York, and is also pursuing her master's degree specializing in accounting data analytics and technologies at Pace University, New York, and the US CPA and ACCA program. Academically, she is interested in the audit field and looks forward to her exciting summer 2022 internship with Eisner Amper in their New York headquarters. She is intrigued by cultural diversity and history and thoroughly enjoys multi-ethnical atmosphere. I sincerely thank Ms. Vaishnavi Senthil for spontaneously accepting our invitation to address the young minds on the topic in spite of her busy schedule. I welcome the Principal, Dr. S. Kote, Vice Principal, Dr. D.B. Usharani, and Vice Principal Self-Supporting, Dr. T. Usha Priya, heads and faculty of other departments, and our own to this webinar. I also welcome our dear students. Have an informative day. Thank you. Over to Ms. Vaishnavi Senthil.
Good afternoon, everybody. Thank you for joining today's webinar on accounting data analytics. I hope this is very informative and interesting. Can we please have the presentation on? Next slide, please. Next slide, please. So what is data analytics? Data analytics is the process of exploring and analyzing large data sets to find hidden patterns, unseen trends, discover correlations, and derive valuable insights to make business predictions. Businesses around the world generate large volumes of data daily in the form of log files, web servers, transactional data, and various customer related data. So, in simple words, data analytics is defined as analyzing the data for insights and trends that help companies achieve better results. Next slide. Why is data analytics called the future of every industry? In the future years, data analytics will play a critical role in the industry. They will be known as the data guardians. They will protect data privacy, identify innovations, and so forth. Companies will be more vocal in their demands and will make better use of data to obtain financial benefit, demonstrating that data analytics has a great potential. Data has become much more accessible, and anybody in an organization may utilize it to boost efficiency and improve outcome. Next slide, please. So, data analytics across all industries. Companies get data from all tiers of their organization and industry. This provides businesses a leg upon the competition by allowing them to observe where improvements are needed and where revenue patterns have risen or declined. It allows businesses to detect possible market gaps. Data analytics allows for prediction as well as knowledge discovery. It aids in the comprehension of the actual status of the business or process, as well as delivering a sound platform for forecasting future results. Data has become accessible in such a way that any employee with analytical skills and the interest to learn can provide analysis and spark in the industry. Next slide, please. How is data analytics used in accounting? Accountants and auditors utilize data analytics to assist firms in uncovering important financial insights, identifying process changes that can streamline the process and better mitigate risks. Accountants who help us serve as investment advisors utilize big data, which is one of the technologies we'll be discussing later today, to identify consumer and market behavioral trends. These patterns can aid firms in developing analytic models, which can then be used to discover investment opportunities and increase profit margins. Some of the instances are both internal and external auditors are using data analytics to enable practices such as continuous monitoring, continuous auditing, and analysis of full data sets in situations where only samples were tested earlier. Financial planning analysis professionals analyze data in hopes of discovering the best course of action for their companies. CFOs and finance leaders use big data and find patterns in customer behavior and market trends to drive company strategy. Next slide, please. So there are four different types of data analytics. In other words, this can also be called as the four different stages of analyzing data, the processes. So the first of that is descriptive analytics. It is information that has happened in the past. Basically, what has happened. In accounting terms, an example can be earnings performance. Profits and losses has been realized, so it has occurred. There is no change that's taking place at the moment. The second stage in data analytics is diagnostic analytics. This describes the reason for the historical results as to why did it happen. An example is earnings management detection models. Again, tracing it back to profits and losses, if the firm made profits, they can compare abnormal profits with the current activities. But if a loss has occurred, they will analyze as to why did the loss occur. The third stage is discovery analytics. It determines whether there is a relationship between the historical information and another database. Effects of earnings management and concurrent stock returns is an example of this. The fourth stage, which some scholars actually name as the future of data analytics, is predictive analysis. Predictive analytics determine what will happen by analyzing historical data and trends. In simple words, basically what's going to happen, forecasted outcome of the future. Effects of current earnings management on future earnings performance and stock returns. In other words, effects of earning performance today and how it will determine the future cash flow of a company. Next slide, please. To put the different data analytics types into accounting perspective for a common layman, descriptive analytics, accountants track the money flow in and out of their enterprises, including income and costs, stock levels, and excise taxes collected. Diagnostic analytics is one where accountants assess deviations and compute historical performance on a regular basis. These calculations are necessary to construct accurate estimates since historical information is frequently a great indication of future performance. Predictive analytics, again, which is the future of data analytics, is to evaluate the possibility of future outcomes. Data is employed at this stage. Accountants play a critical role in forecasting and recognizing trends that affect forecasts. Business executives become more secure in accepting accounting practitioners' projections when they function as trustworthy consultants. Next slide, please. So these technologies enlisted here, big data, UI, UX, web designing, cloud computing, cybersecurity, augmented reality, blockchain, machine learning, artificial intelligence, virtual reality, design thinking, data modeling, digital world, and 3D printing are the current technologies used in data analytics by big four accounting firms and other accounting firms, not just accounting firms, but across all business functionalities in various industries. I'd like to briefly go over a few technologies and talk about how integrating these technologies has benefited accountants and auditors. Next slide, please. The first technology is big data. Big data in accounting is measured in terabytes and zettabytes, which is about the processing power of a typical server. Big data involves large volumes of knowledge of various varieties being generated at high velocity. Big data can generate accounting information on a real time basis, increasing both the volume and speed of data collection. The three V's, volume, which refers to the amount of data, variety, which refers to the number of data types, and velocity, which refers to the speed of data generation and processing, are three defining properties or dimensions of big data. Next slide, please. These are some of the benefits of big data in auditing. Big data can enhance the sufficiency, reliability, and relevance of audit evidence, which further improves audit quality. For instance, in verifying shipping information, traditional shipping documents are the primary proof of occurrence. Additional big data, such as GPS data, can provide more solid verification. Big data will also make fraud detection more effective by generating connections between financial and non financial information. An instance of this case is the emails, phone calls, and meetings of audit committee can all be collected cumulatively and analyzed to identify potential patterns of links or financial data. Big data can improve the efficiency of overall data analytics, which can offer audit evidence on a larger scale, larger and more complete scale, builds connections between financial statements and actual business operations, and identify potential red flags. Given that audit process is slowly moving from sample-based testing to the data-driven population testing, it helps with incorporating the key areas of a business into decision making, as the primary goal of an auditor is to thoroughly analyze the business environment before making an audit opinion. Next slide, please. These are some of the other examples of benefits from the integration of accounting and big data. Sales calls made to customers might be combined with revenue numbers to provide a complete record of sales activities. Surveillance videos can be merged with inventory data, which can be effectively used as complementary audit evidence, providing additional evidence. Activities that contradict the established customer preference can be recognized by the auditor as areas of risk. Next slide, please. The next technology we have is cloud computing. The cloud is not a physical entity, but instead is a vast network of remote servers around the globe which are hooked together and meant to operate as a single ecosystem. These servers are designed to either store and manage data, run applications, or deliver content or a service such as streaming videos, webmail, office productivity software, or social media. So, cloud computing, in simple words, is instead of accessing files and data from a local or personal computer, you are accessing them online from any internet capable device. The information will be available anywhere you go and anytime you go. Anytime you need it, you can access it 24/7. Next slide, please. So this is a very interesting slide displaying the transition of cloud computing. As you can see, the transition of cloud computing and data storage over decades from 1970s to 2011 when cloud computing was initially implemented. In the 70s, it's been a floppy disk with varying sizes 8-inch, 5/4, and 3.5. And then CD and DVD in the 80s and 90s era, and then USB, SD card, and finally cloud computing. So most of us might have seen CD, DVD, USB, and SD cards, and our parents and their previous generation were probably familiar with floppy disk. But this is the advantage. So cloud computing eliminates the hassle of having to delete data because you're not able to store new data. Next slide, please. Cloud accounting is the usage of accounting software whereby the data is stored on the cloud rather than on your computer. Some of the benefits of cloud computing that has helped the accounting industry is lower cost of ownership. It's always up to date because the software is automatically updated. It's convenient, offsite data storage. There is no physical storage requirement, which results in low IT maintenance cost, and there is overall productivity. To get into the detail of benefits, financial data stored in the cloud is also protected from natural catastrophes since it is automatically backed up and accessible in the event of a disaster. Accounting software that is cloud based allows accountants to access data, reports, and receipts at any time of day or night. Accounting experts will be able to work from home because of this. Every transaction completed through a bank account is presented and reconciled in the cloud accounting file, which gives accountants a sense of peace. Data is automatically stored and backed up as you go using cloud accounting. So accountants don't have to waste time storing data or doing data backup, which can actually be extensively time consuming. Finally, widespread availability also improves collaboration within team. Next slide, please. The next technology is cybersecurity, and it's one of the hottest technology in today's world, demanding high-skilled labor and employees. But again, not a lot of people choose this field because of the challenges that come along. So IBM defines cybersecurity as the practice of protecting critical systems and sensitive information from digital attacks. Also known as information technology security, cybersecurity measures are designed to combat threats against network systems and applications, whether those threats originate from inside or outside of an organization. Next slide, please. Accounting cybersecurity standards guarantee the sensitive data is protected not just for the firm's compliance, but also for the purpose of protecting financial, personal, and monetary business data of the clients. So these are some of the risks associated with cybersecurity for accounting: security breach, client risk, financial risk, ease of hacking, loss of reputation, and loss of intellectual property. To get into the details of these risks, for accounting firms, cybersecurity is a powerful deterrent. Hackers are increasingly sophisticated, and the growth of cyber incidents is significant. They must also guarantee the safety of the information that clients entrust to their care. If an accounting firm is exposed in an attack, the losses are far more than just financials. There is a major reputational loss and client data and IP, which is also known as data privacy. Next slide, please. The next technology is data modeling. The act of generating a visual representation of an entire information system or sections of it in order to express correlations between data points and structures is known as data modeling. The purpose is to show the many types of data that are utilized and stored in the system, as well as the relationships between them. the different ways that data may be categorized and structured, and the different formats and properties that data can have. Data models are generally built around business needs. Rules and requirements are defined upfront through feedback from business stakeholders so they can be incorporated into the design of a new system or adapted into an existing one. Data can be modeled at various levels of abstraction. The process begins by collecting information about business requirements from stakeholders and end users. Next slide, please. This picture defines in simple diagram what data modeling is. As you can see, it is comprised of bars and lines and just like graphs. This is an accounting data model that is simply broken down into diagrams and credentials for a common layman to understand if he doesn't have technical expertise in this particular field. Let's say someone does not know any conceptual basis of accounting and wants to understand the financials of his business. So here, the machine room of financial governance in this basic conceptual data model combined with simple functionality, which is known as the accounting applications. So at this level, you are looking at three-dimensional data model with three dimensions. One is the credit account, another is the debit account, and date and time because it's accounting, and the two-fact table, which are posts and journal entries. The accounting functionality is based on the above mentioned concepts. So, data modeling, in simple words, eliminates the hassle of complexities and technicalities involved in any particular field and enables anybody to understand in simple terms. Next slide, please. So, how do clients benefit from data modeling? High level business processes may be more easily integrated with data rules, data structures, and the technological execution of a client's physical data via data modeling. Data models bring together how a company runs and utilizes data in a way that everyone can comprehend. Data modeling also makes sophisticated high tech aspects of a company more accessible to non technical employees. To conclude, business users may have a direct involvement in designing essential business rules via data modeling, which means fewer adjustments are required during implementation. Next slide, please. The next technology is user experience and user interface, and I'm pretty sure most of you have heard about this technology, which is commonly used in web designing. UI refers to the aesthetic elements by which people interact with the product, while UX is about the experience a user has with the product or service. Next slide, please. So, how does UX UI work? UX designers primarily focus on several high level constructs defining the UX measures: utility, usability, aesthetics, stimulation, identification, and value. Next slide, please. Some of the UX UI benefits for the accounting industries: reduces data entry errors, minimizes use of paper invoices, reduces processing time, saves downtime for educating UI users, improves overall efficiency of audit, that is in terms of UI generated earnings chart, etc. A specific UI design for inventory would help the auditor in evaluating the total quantity of items that the client has in the range and how many of them are in stock, basically inventory count. In the case of an auto-generated UI chart, it would display the positive and negative value of earnings, making it easier for analysis to take place. This chart would also help auditors to analyze sales and expenses by looking at the costs incurred by the client and the number of goods sold. In conclusion, the US technology will the UX technology will equip the client with knowledge that will help them to make accurate choices about how to resolve the difficulties with their business by redesigning the user interface that will more successfully meet user and business goals. Next slide, please. Uh, The next technology is virtual reality, and this is one of my favorite technologies, and it's a very fun technology to learn and understand. Virtual reality in a digital environment where the user is a digital environment where the users are introduced to a stimulated environment. VR aims to assist the accountants in making better sense of the vast financial data generated by every company. It also can be used to devise different kinds of approaches to business development. Next slide, please. Some of the utilizations of virtual reality in accounting: updating real time inventory. Inventory updating real time or checking inventory for bulk orders is still a very lengthy process. Virtual reality will let the accountants know the status and the value of inventory in real time. In addition, VR will reduce the cost of hands on physical inventory and transportation cost. The customer can view new products and its specification in a flick of a finger. This not only enhances customer experience but also saves the business from the inventory related expenses. Smooth transition for remote work. Remote work virtual reality will enable accountants to remotely work anywhere from the planet. It delivers experiences to its users to get operational efficiency from its employees from any corner of the world. Whether it is a team meeting, a training program, presenting rewards, or recognizing the employee performance, VR will make them a rewarding experience for the remote employee. Accounting will be more accessible. Integration accounting will be more accessible to its users and it will integrate itself. We are experts are of the view that accounting will be more accessible through social media sites like Facebook Messenger or Slack. VR can also make accounting available through virtual assistants like Siri, Alexa, and others. This method will encourage the free flow of communication between customers and the business. However, it will also assist in discovering new apps and initiate a quick solution for any type of financial query. Efficient auditing is one of the most is one of the beneficial advantages of UI UX because cash audit can take a toll on anyone. It's been a relic of past VR and it's making improvements in the transactional aspects of business, which is a very intuitive task. If a company must maintain its customers, the ease of payment is a crucial factor. Businesses that accept all kinds of payments like credit, debit, and other payment methods can enjoy better customer retention. Once the transfer of payment has happened, the virtual reality will feed the transaction directly into the accounting systems. This enables more efficient auditing and makes information available in real time, which is a huge challenge. So, reconciliation and finalization of accounts will become a quick and easy process. Next slide, please. So this is something that has happened over the past 2 years and is still continuing in Big Four firms. So how Big Four firms took advantage of virtual reality technology during the COVID-19 pandemic. KPMG auditors used smart glasses to perform inventory count remotely, which they claimed as one of the most fun games they've ever played. It felt like a video game and it only got more interesting because if you ask an auditor, they'll say inventory count is never interesting. But VR made it a very interesting challenge. PwC used virtual reality technology to provide hands on training experience to newly hired associates to overcome the obstacles of remote working. The auditors also claimed that it was challenging and fun to be exposed to a virtual client side experience. Next slide, please. Data analytics performance model. So, as you can see, the initials of each of the six phrases, this model can also be called as the impact model and is used in is used in industries across different business functionalities to actually analyze data. So this is a process of analyzing data based on situation and is customizable. The first step is to identify the questions. The second step is to master the data, then to perform the test plan, which is procedural performance, and then to address and refine results, communicate insights, and finally to track outcomes. Next slide, please. So, examples and questions on the model. The first step as to identify the questions, it can be any situation, no matter what the industry is. If data analysis has to be performed, it's for yielding better results. So there is a circumstance and one needs to analyze, one needs to figure out if there are challenges and if questions need to be addressed. So, in terms of an accounting industry, questions like, does the management overstate sales revenue? Are all expenses recorded? Does the step in procure to pay process being followed, which is also in other terms known as effectiveness of internal control? And if there's a travel insurance reimbursement policy, if that is being followed. These are just examples in the accounting industry, but questions will have to be addressed based on the circumstance. The second step, which is master the data, is also known as data preparation and data cleaning, in other words, data wrangling. So, in this stage, data has to be available based on the relevance of challenges that were questioned in the first stage. And data source has to be extracted from reliable sources. That is most likely internal information, ERPs, or external data from industries and organizational tiers. Data interpretation is usually done after data preparation and cleaning, which is also known as data wrangling. But the main point here is to source relevant and reliable data to ensure completeness and accuracy. Descriptive statistics, which is basic statistics in terms of count, average, max, and min function, is also analyzed at this stage. The next stage is descriptive, is performance of the test plan. And in this stage, descriptive, diagnostic, predictive data analysis is all analyzed. Descriptive data and diagnostic data analysis uses statistical analysis to help analyze data. So, in that way, duplication can be avoided, gap detection can be avoided, and filters can be applied to avoid violation of audit analytics. Statistical tools are also used, like regression and classification in predictive data analytics. The next stage is address and refine results. In this stage, even though statistical analysis has been performed and there is a possibility to make an outcome based on historical information and forecasted outcome, further questions have to be asked and data has to be explored, basically to play and model with the data, to rerun the analysis and to identify any issues or possible issues that help in refining the model. The fifth stage is to communicate effectively with decision makers or data scientists, and to follow up on the results of the analysis. Data scientists are basically the performers of data analysts who collaborate with auditors or accountants or the respective professional in the respective industry to fully form a data analysis trend. And the last stage is to track outcomes. Next slide, please. The different tools used in accounting data analytics are Microsoft Excel, multivariate statistics, which is defined as simultaneous study of multiple variables to test for interdependency. R and Python, which are programming languages. Idea Caseware is specifically designed for audit data analytics, for sample testing and population testing. SAS is also an accounting software, but can be used in various industries for data analytics. Regression is another statistical tool which helps in analyzing a set of statistical processes for estimating the relationships between a dependent variable and one or more independent variable. And integrative technologies, like all the 14 technologies we just saw, and a couple of technologies that we went over on a brief note. So, next slide. So that brings me to the end of my presentation, and I hope this session was very informative. So thank you once again for joining this webinar. Thank you.
Thank you for such an insightful session, ma'am. We sincerely appreciate you making time for us amidst your busy schedule. I'm sure the gathering would be immensely benefited from this session. Can we move to Q&A session, ma'am?
Sure.
Who is responsible for performing data analytics?
So data scientists are known as data analysts, and they collaborate with, in the accounting industry, they collaborate with auditors or tax accountants to field the data based on what needs to be analyzed and establish trends based on historical information and forecasted outcomes. So data scientists, but also any professional can learn the tools that were just mentioned in my last slide to perform data analytics.
That was really nice, ma'am. How will data analytics change the tax field?
So data tax accountants actually use data science, which is also known as data analysis, to quickly analyze complex taxation questions related to investment scenarios. The first thing that comes to anybody's mind in terms of taxation is about how tax season can get complex and busy. So when technology is incorporated into busy season, accountants feel relieved in a way because there is a technology called machine learning, which is one of the major technologies used in data analytics. So ML basically helps in scanning and recording missing client information from previous returns. So tax accountants would not have to go through the whole process of scanning and recording each and every client's information manually this year also. And in other fields, like I mean in tax field itself, to develop insights and a better understanding, tax data analytics integrate tax technical expertise, because these are vast volumes of data, especially in public accounting and big four firms. Like
Yes.
it's large data sets. So big data, which breaks down large data sets into smaller data sets, is used to incorporate modern technology such as visualization tools, one of which was data modeling that we saw earlier today. Tax analytics may also assist a company's tax department in making more informed decision when it comes to investment purposes.
How data analytics is used in financial reporting?
Data analytics and financial reporting, it so data analytics boosts helps in boosting confidence for any business, because they have the information in their hand from past patterns and observation and future predictions. So reporting takes place in such a way that it helps mitigate risks, and it's in compliance with the reporting standards to improve the overall financial functionality. Combining big data with business intelligence and financial dashboard reports makes it easier to spot inconsistencies and trends across the data. So technically, reducing the risk of non-compliance. So it can be used in such a way.
That was really nice, ma'am. What are the major challenges faced in implementing data analytics in accounting?
So, one of the major challenges that comes with data analytics is the cost, because technological advancement is very expensive. And the cost of implementing this is not easy, especially for small to mid sized accounting firms where auditors and accountants are used to the traditional and conventional approach of performing audit and like their own accounting. It might be also harder for them to grasp these technologies at a certain age. So that is why like data analytics is being implemented in schools and colleges today to help future auditors and accountants to graduate with the idea of data analytics, because at the end of the day you need to know what you're signing off on as an auditor, because it's all integrated with technology. So you cannot just be like, yes, I'm the auditor that signed off on something without knowing what it actually is, right?
Yes.
In other ways, facts and surveys state that managers and auditors also get very frustrated because they don't know what's going on in terms of the technical aspects, because data scientists clean the data and they perform data analysis.
Yes, ma'am.
And on the other hand, auditors and accountants only conclude, sign, and make sure it's in compliance with accounting standards. But auditors are also saying that when they talk to clients, they leverage data analytics to give them more insightful business ideas. And as a matter of fact, they're being forced, not forced, they're actually in a position to learn data analytics because it's highly demanded by clients today. So yeah, these are the major challenges, in my
Yes,
opinion.
ma'am. How many accounting firms use data analytics?
Uh, there is no number on this because there are numerous firms in the world, varying from different sizes, small to mid to big, and different tiers. But data analytics is definitely used by all the big four firms. I'm not sure on this number, but I believe like all the big four firms together have invested over 9 billion US dollars in technology alone. But again, all accounting firms will have to eventually move to data analytics if their clients demand it, because if they lose clients, they're not going to make any revenue. So it's completely based on client side demands. So yeah.
Yes, ma'am. That was last question, ma'am.
Okay, great. Thank you so
Thank you,
much.
ma'am. I appreciate your patience in answering all our questions.
Thank you
Now,
so much.
I request Ms. Rakshmi, Association Secretary Aided, to propose the vote of thanks.
Gratitude is not only the greatest of virtues, but the parent of all the others. Good afternoon, everyone. It is such an honor to propose the vote of thanks for today's event. On behalf of the Postgraduate and Research Department of Commerce, Ethiraj College for Women, I would like to express my sincere gratitude to Ms. Vaishnavi Senthil for the informative session. You have given us a deep insight into the subject, ma'am. Thank you, ma'am. I would like to thank the management headed by Mrs. Chandradevi Tanikachalam, Principal Dr. S. Kodai, and Vice Principal of Aided Stream Dr. D.B. Usharani, and Vice Principal of Self Supporting Stream Dr. T. Usha Priya for their constant support in all our endeavors. My heartfelt thanks to Dr. A. S. Sharanya, Head, Department of Commerce, Aided, and Ms. Geeta Krishnan, Head, Department of Commerce, Self Supporting. I thank the faculty and student coordinators for their guidance and support in making this event a grand success. I acknowledge with gratitude the support extended by the technical team. Last but not the least, I would like to thank you all for being a wonderful audience. Thank you.
Thank you, Ms. Rakshmi. I thank all the audience for their patient listening throughout the session. Participants are kindly requested to fill the feedback form posted in the chat box. Stay tuned for upcoming events. Thank you. Have a good day.